Hey traders and investors, cruising into 2021. I intended to put this video out on New Year's Day, and then I strained my hamstring, something fierce in the final hours of 2020, so it was backtracked a bit, but we're here now, better late than never, and there's a lot that we can do to prepare for the coming year as traders. First and foremost, if you are on year 2, 3, 4, ideally you're going to be looking back at your previous year's game plan. So preparing, for me, what I did is I went back and watched the video that I put out last year. And if you Google New Year's Traders Resolution Chart Guys, that video will come up, and I highly suggest watching it because there's a lot of information in that video that I'm not going to repeat in this video, but it is very useful information for establishing your game plan and reflecting on your previous year's experience. In this video, we're going to be looking at a member's example of how they analyze their trades and set their goals and game plan for the new year, because it's pretty much picture perfect and what every single trader should do as far as preparing for the coming year. So just for myself personally, I'll cover a little bit at the end about myself, but the number one thing that I am proud of is I went back and saw, okay, one of my resolutions from last year is don't trade natural gas. It was your biggest loser. And I still analyze natural gas on a daily basis, but I was successful in not trading it once in 2020. And that for me is a big check mark for discipline. And we know how important discipline is as a trader, whether it's sticking to stop losses or not going on tilt and blowing up your account. So anything that you can do to prove discipline to yourself and to practice discipline is certainly worthwhile. So your teacher told you to never just read off the slides, but in this example, we're just going to go through essentially what this member went over as far as his game plan. So 2019, hard year for them. They lost a lot of money making mistakes and repeating them, and essentially just trying to trade a downtrend bullish. Canadian MJ was in a prolonged downtrend, and this happened to a lot of people. At the start of 2020, they worked out a plan and made some goals for the year, and they stopped focusing on Canadian MJ and went to look for opportunity in other sectors. That is very important. If you've been following the chart guys, you know I encourage crypto traders to get into marijuana stocks. I encourage marijuana traders to get into crypto stocks, because the more comfort we have in different sectors, we know that there is always an opportunity somewhere. If we are a one-trick pony and we can only trade one sector and that's the only thing we're looking at, then there are periods where it becomes very difficult. But if I have the agility to bounce around to where the opportunity is, that is significant, and it can allow for compounding gains. One of the best trading decisions I've ever made in my life was taking profits in 2017 crypto and rolling them right into the bull market of Canadian MJ that followed shortly thereafter. If I had kept only trading crypto with the same capital sizes, I would have given back a massive amount of my profits. But knowing that there was greater opportunity elsewhere allowed for me to compound gains instead of giving back profit. So in 2020, their goals were improve day trading consistency by locking in small, repeatable trades. Certainly my style as well, going for day makers and not really going for home runs much. Focus on compounding effects of small percentage wins. Don't swing for home runs when I can get 4 base hits. So basically confirming that style with me as well. Weekly goal of 3% account growth. Daymaker is 1% of account. Weekly goal is essentially 3 day makers. And I do that to a certain degree as well. If I were to have, I have my yearly goal. If I were to hit my day maker every single day, I would blow past my yearly goal. But I know I'm not going to be green every day, so we have to account for some of the red days mixed in there that are going to offset what our average green day might be. And of course, always manage risk with position sizes and stops. That goes back to the discipline. If you are not managing risk, if you are not using stop losses, all it takes is one mistake to erase 1, 2, 5, 6 months of profit, and that is a terrible spot to be in. So setting the rules and the discipline. And again, this is very concrete. You write these rules down on paper. There's no ambiguity. There's no room for interpretation. Risk no more than 3% of your account on a trade. And again, every single individual is going to have different rules and a different trading style because all of our financial lives are so different. For some people, they would say, wow, I would never risk 3% of my account on a trade. My maximum risk is 0.5%. Other people, maybe with smaller accounts being more aggressive, are going to say, well, heck, I risk 20% of my account on a given trade. So everybody is different in that regard, which is why it is so hard to find our own style. It takes a lot of trial and error, and that is what setting these rules does. don't lose more than 10% on a single trade. So that means if you're at your maximum risk of 3%, and you're only risking 10% of that 3%, you have a maximum risk of 0.3% on any given trade on your total account. Scale in and out of positions. And again, I love scaling in and out because I know I'm not going to be nailing tops and bottoms, and it helps me find a suitable average as I'm looking to play off of support levels, as opposed to just trying to get it all in one go. There are times where I will do it on one trade if I have a clear support level or resistance level and it's right nearby, but normally I am scaling in and out of positions. And for me personally, with my base hit style, that has been a game changer for me. With option trading, weekly option size to max loss of 1% of their account, monthly option size to max of 5% of account. So weekly options are obviously more risk and more reward, so they have a smaller allotted risk for that. No more than 10% of account in option positions at any given time. That's to prevent them from getting overwhelmed. Plan to scale in and scale out of trades, scaling out of option positions to keep risk within 1 to 2%, 1 to 2.5% account loss. Important from a risk management perspective. So again, you can go back and check yourself. If you are not sticking to these rules that you set for yourself, it is a massive red flag. And no matter how good a trader you are, if you don't have the discipline down, it won't matter in the long run because you won't be playing this game for decades, because again, all it will take is one mistake to blow you up. Visualizing their data. Obviously, we love charts, so putting data on charts is a great way to do it. Day trade portfolio growth per week, ending up plus 150% plus in 2020. Certainly very impressive. There's some big dips in there, but always recovering, and a solid uptrend of a chart. You can see they started fairly slow, got a little bit of the mojo, big hit, and then very strong ending. Weekly percent gains and losses. You can see there was a big couple weeks in there. And what you want to ensure is that you're not seeing a significant amount of red weeks in a row. You want to be able to stop that bearish momentum as far as your account is concerned and not have a losing streak. And the other thing you want to see is not go from a big win to then a big loss the next week after, because that's going to show you that you maybe got a little bit overconfident and maybe you upped your risk size too much. And again, essentially what we want to do is, it would be better to stop trading completely for a week than it would be to just keep trading and compounding mistakes and staying in a losing streak. Again, I keep saying this, but the number one tool that we have as traders is we choose when we play this game. I can wait until all conditions are favorable before I put my money at risk, or if I'm not that disciplined, I can just be tossing darts, and that's, again, when the lack of discipline is going to cause trouble. Reflection. They're happy with their day trading results. Certainly justified. I'd be happy as well. First full year of day trading, after trading for 3 years, where they feel consistent, in control, executing a plan, goal of 3% per week. They hit 1.9%, little short of the target, but again, 150%, certainly very significant. And it's even more impressive because it is the first year of day trading. So I often say that, year 3 to 4 is when traders start to hit their stride, the traders that are going to be successful. It's really year 1 through 3 that's a ton of the learning experience and a ton of trial and error. So ideally, by year 3 to 5, you want to be finding your stride, and this individual looks to be right on schedule for that. The gain graph is in an upward slope, which is good. Significant volatility between the higher highs and higher lows, so need to improve their risk management in that regard. And ideally, it looks more like a staircase than, or I should say a staircase with a 3% bump. Really, the only red flag here is this period right here. Other than that, here, after such a big bull move, that's acceptable if it were me. And of course, nice recovery, but this drop right here is what you would want to eliminate. And if you take that out of the chart, it's certainly a much more bullish looking chart. Several times where they lost more than 2 weeks in a row. So again, we want to stop that. In order to go full-time trading and to be able to pay their bills and feed their kids, they need to figure out a way to mitigate multiple losing weeks in a row. And that would be stopping trading, in my opinion, or decreasing position size until you get that flow back. But for me, it's really just stopping trading. If I'm in my flow, I'm trading 15 to 20 times a day. And if I'm not in my flow, I'm trading 1 to 2 times a day. So you could even just say to yourself, all right, I get one trade today. I better make it a good setup. And if you make your trade and you get a small loss, then you're done. And again, that's to ensure that we keep flow state for winning, but we don't enter whatever the opposite of flow state is when we just consistently are in a losing streak. Many weeks had losses greater than 5% of their account. These losses were mainly due to options positions that went against them. Need to improve risk management on options and make sure limit downside risk in their account. Psychologically, it's hard working back from losses after erasing a few weeks of work. Done it many times. The one thing they've always believed is that they're capable of being profitable and that they can do this. Mindset obviously is essential. We have to have that belief in ourselves. We have people that, I come across traders wanting to learn technical analysis, and their mindset is, I always get stopped out. Whenever I put a stop loss, I get stopped out, and it instantly goes back in the other direction. And that is just such a negative mindset to have if you're just feeling that, the world's out to get you, and I'm just not going to use stop losses. As opposed to, I keep getting stopped out right before a bull move. I need to tweak things to ensure that that no longer happens. So it's just the taking the victim card versus using it as motivation to continue working even harder. Psychologically, we already did that. Sizing up. Need to improve sizing up now that their account is growing. Find they're comfortable trading with 30% of the capital and leaving the rest cash. Need to work on using larger position sizes for good setups. That's one of my goals for 2021, just adding to winners. I've done it a little bit recently, and just when I'm in a comfortable position that is profitable and I make another entry adding to that winner, I'm only risking the profit that I've already achieved. So that's something that I want to do as well. Letting winners run. Work on leaving runner positions for swings and more profits. Need to develop some strategies on this. Maybe keep a 10% position and set a break-even stop. So that's partial positions for me. If I sell half a position, I can put my stop loss under a support level that is break-even or low risk, then I'm much more comfortable letting that trade play out. And also for me, I need to leave the computer if I'm going to do that, because these little 5 and 15-minute moves can very easily distract me from my longer-term game plan. So if I can set my stop at break even and close the computer, that, in my opinion, allows those winners to run a lot easier. So that is pretty much an ideal example of how we can use our past performance, reflect upon it, set our rules, set our goals, and proceed forward in the following year. And honestly, if you really want to be on your game, do this on a monthly basis as far as reflection is concerned. We have to put a spotlight on all of our mistakes, because if we are not recognizing, acknowledging, and fixing our mistakes, we're going to continue making them over and over. And as we know, if we are going to be doing this for decades, we want to be better at year 4 than we are at year 3, and even better at year 6, and just constant improvement. And we don't know what to improve upon unless we get in there with a magnifying glass and see exactly what we are doing wrong. So reflecting back, visualizing data, finding our mistakes, setting clear rules for the following year, and then setting our goals. And that goal setting is important because, again, we have to have something that is concrete. We can't just say, I want to be a successful trader. What in the world does that even mean? You can't quantify that. You have to say, I want to beat the S&P 500 on a yearly basis. I want to make 20%. You have to give concrete, clear goals that you can work towards. And that is what helps with motivation as well. So I'm not going to go nearly in depth for myself personally as to what my reflection is, but these are my results and I am pleased with them for 2020. Essentially, my path over the last few years has been very significant gains in crypto in 2017, very significant gains in MJ 2018. 2019, I said, okay, I know this can't keep up. All I want to do is just keep my profits and slowly add to them. And that's where I shifted gears from going extremely aggressive in a hype blue sky market to different ones and compounding gains and using large position sizes. And then me essentially changing, if I had to give an analogy, it would be me accelerating in 2017 and 2018 to get on the highway, on the on-ramp. And then 2019, I'm on the highway, and now I'm setting it into cruise control because all I want to do is just not give anything back and just maintain steady. So in 2019, my gains were maybe 25% of the average of the previous 2 years. But it hit my goal, and this year, I kept a fairly similar goal, and again, just trying to stay steady and stay green. Just don't give anything back. Priority number 1, do not give back any profit. Priority number 2, add to that profit. So my day trading account has the vast majority of my capital in it. If I were going to compare, I would just say day trading has X amount. This is the TCG company account that has maybe 10% of my day trading account, and my retire IRA has similar, maybe 10, 12%. So day trading account, significantly larger, and nice to see that the percentage gain is nice and large comparatively. I blew my gains out of the water in terms of what I was looking for. You know, I'm just looking to beat the S&P 500, and beating it by about 150% is certainly, it gives me more cushion, where I don't feel any pressure to have to perform anything in 2021. All I want to do is beat the S&P 500 in 2021, and I have a dollar amount in my brain that's the number that I want to hit, and that goal is, if I hit that number every year, I have absolutely nothing to worry about financially, and that is financial freedom. So that is what my goal is. Fortunately, in 2021 or 2020, this doesn't have my crypto account in there, and my crypto gains are probably half of my stock gains, but it was essentially a 3-year maker in 2020, and that, again, prevents from that feeling of I have to make something up. So I know that mindset, and that's definitely, as our member review said, you know, trying to make back losses that took weeks to gain is never a fun place to be in. So ensuring discipline and ensuring that if I have a bad week, it's going to be something that I can easily make up the following week. That's very important to me. You know, a red day is no big. Whenever I have a red day, unless I make a big mistake with a lack of discipline or a lack of stop losses, which does still happen once in a blue moon, but it does happen, my goal is to just put as much time in between when it happens as I can. Nobody's perfect. But when I have that red day, my reaction is always, great, I'll make that back tomorrow. And that's because I know it's only 1 or 2 steps back, as opposed to giving back 2 weeks or a month of my gains and then looking at a mountain that I now have to climb to get back to where I was. If I have the discipline and I'm sticking to base hits, then I know that it's just one little green day and I'm back to exactly where I was the previous day. If I have a couple red days in a row, I stop trading, I reset my brain, I wait for a more favorable setup, but keeping the flow as long as we can and breaking a negative flow as soon as it starts to develop is essential for consistency. So a little bit more, my TCG account here for the company, I'm only taking a trade every couple of months in that account. Part of that money is not mine, so I'm extremely picky. I'm waiting for the ideal setups, and so those don't come along very often. My IRA is more swing trading focused, and I highly suggest breaking things up. You know, if you only have one account and you're day trading and swing trading, perhaps making that into 2 accounts can help separate your brain to know that, okay, these are swing trades and these are day trades. I know that I personally get a little bit overwhelmed when I'm in a bunch of different positions and trying to, you know, keep them all organized in my brain as to what the game plan is for each of those positions. Aside from that, biggest trades, Tesla day trading was my #1 winner. NIO was also up there as well. Just finding the names that have a lot of volatility, watching them, trading them, and getting very comfortable with them has been something that was key for 2020. So I'm doing that here in 2021 as well. And just in the first week, DDD has had a ton of volatility in both directions. I've been day trading it the last 2 days and just getting comfortable, because if it's going to give me a range of 100% in 2 days, I know that it's going to keep that volatility. Even if it forms a tightening range for the next week, that's still a ton of range to work with. And I know that any given day, there's going to be percentage moves of 5 to 10%, which all I need is a couple of those percents and I get my base hit and my day maker. So continuing to look out for volatile names, not giving back any profit, and looking forward to heading into 2021 and keep up the momentum from 2020. I hope you had a good year. Reflect upon it. Set your goals. Do everything that these videos talked about. Check the 2019 video as well. Again, lots of points in there that I don't talk about in this video. And hopefully these videos can help guide you to preparing your game plan for a successful 2021. Cheers.